Hi there, welcome back to the Open. As we head towards the second hour of trade, quick check-in on the local market for you. The 200, we're down around about 0.25%, 58.66 at the moment. Well, with some of the bank shares under pressure due to the Royal Commission, they're actually high at the moment. Some investors, perhaps, might be seeing some opportunity. To find out more, nabtrade Director of SMSF and Investor Behaviour, Gemma Dale, joins us at the desk. Gemma, appreciate your time as always. Always fascinating to see what people are doing with their own money at the moment. And have we seen any kind of fund flows as a result of what's been coming out of the Royal Commission? Yeah,
really, really strong. So our investors love banks. They love the yield. They're very, very comfortable with the financial sector in general. So they have been buying AMP very strongly over the last few days. So I haven't got any data on this morning. It'll be very interesting to see how they're responding to the announcement, obviously. Wednesday, AMP was triple the volume of the next largest bank, which is unheard of. We would never see that in our book ever. So they're seeing that as being something of a value opportunity.
And what does that tell you? I mean, do you start to see that with other stories or other stocks that are under pressure? Do they generally go in for those sorts of stocks, or are they quite specific around the type of company it is that they're willing to back when they're under pressure?
So they're very particular about what they like. We know they're naturally quite contrarian if they see a dip. This is domestically, though. Globally, they will chase the big names and they're less price sensitive. They're much more enthusiastic about getting on the back of a growth story globally. Yep. And with small cap resources, they're very keen on getting on the back of a rally, irrespective of what point of the rally it might be, because they don't have as much information necessarily about where that will go. But when it's the big stuff, so it's banks, some of the big resources companies and so on, if they're under pressure, they will buy them. They love the yield. What's been really interesting coming out of this is that our SMSFs have been buying less. They're much flatter in terms of their preferences, but our non-SMSF buyers are right in there with AMP in particular. They bought BOQ after BOQ got a downgrade to a sell the other day. They were all over it, 97% buy, which is a fascinating response.
So, I mean, how does that stand with another stock which has been in the headlines, a Blue Sky, for example? I mean, do you start to see a Blue Sky, or those sorts of stocks start to be supported, bought?
Not at all, right?
No.
So something like that where there are significant question marks from a governance perspective, which may not it may not have a longer term future compared to something like a bank, which you're pretty sure will be around, perhaps in a different form, but it'll probably be around. They don't go back for that. So they may have been in there on the way up, but they have gotten out and they're staying well away, which is interesting. So Big Un and Get Swift in a couple of those kind of sexy, interesting stories.
I think you'll find most retail investors feel comfortable with a blue chip if it's fallen heavily, as opposed to something that's sort of on the fringe, like a Blue Sky. That's common. Yeah, exactly. Yeah.
Have you been? Because I think Ords has an accumulate on AMP. I'm not sure whether or not that's going to be revised. So
we do.
Have you been buying for clients?
Well, depending on the client. You know, some clients are just adamant that they're not comfortable with the situation. Look, I would say that at some point AMP is going to be a good buy, because I think, when you go through these periods of Royal Commissions, I mean, if you look at $700 or $800 million wiped off the market cap, it's probably overdone. So, it is a good long-term investment, but it's going to go through a period of volatility through this Royal Commission, as will the banks. There's not a lot of growth in the earnings potential out of the banks at the moment, but they're going to have this Royal Commission hanging over them. So every time there's some bad news come out, they'll get hit. When it goes quiet, the market will buy it up.
You mentioned globally, and we've spoken before, and as you just mentioned, that they like big caps, big strong stories. Tech in particular has been a fan favourite. Does that continue to be the case despite a little bit of lustre coming off?
Yeah, so they love the big brands in technology. They understand them, they can see them. It's much harder, I think, when retail investors go offshore. They'll be buying something they've never seen before. Literally never walked into a branch, never seen it in a store, all those sorts of things. So it's less tangible. They're basically relying entirely on research and not their own experience of it. Tech brands are different, right? You're holding an Apple in your hand, so it's very different. They feel it as well as do the research and so on. They have steered away from Facebook, which is interesting.
Really?
So that little bit of pressure has been enough for them to go, do you know what, that one's not for me right now. But it hasn't steered them away from the sector entirely. They're still there.
And talk me through, sorry.
I was going to ask, what about something like a Tesla? I mean,
still in there? They're still buying, yeah, they like it. I think what's interesting, we've had a look at our younger investors. They have quite a strong ethical bent, and they like the ethical side of that story. They like the idea of moving to something that's a bit sexy and
something that's
interesting.
trading on about 300 times earnings.
Yeah.
Scary to me.
That's a growth story for a young investor, right? They've got the time.
Talk me through clients selling Russian ETFs. I didn't even know there were Russian ETFs, but there you go.
They have them. So a lot of our investors will buy ETFs out of the US. So they're not Australian-based. They're not listed on the ASX. They're listed in the US on the S&P 500 or on the S&P, not in the 500. And they will buy ETFs that give them exposure to things that they can't otherwise get access to. So an interesting story here, interesting story. They'll buy a biotechnology ETF or a lithium ETF. That was very popular for a while there. And clearly someone had some Russian ETFs. We didn't know about that. So the second that Cohen got arrested and there was noise coming out of the, I would say the White House, probably not out of the White House, but out of the US about perhaps some of those relationships not being what you would hope, that's been sold off. So there you go. Who knew? They held them in the first place.
And it just goes to show the White House, the epicenter at the moment of markets. That's for sure.
It's driving some behaviour.
Gemma Dale, wonderful as always. Thank you very much.
Thank you.
Gemma Dale there from nabtrade. We're off to a break. When we come back, we'll have the second hour of trade live for you, so stick around.